Hello and welcome to another episode of Fintech Focus with me, Toby Babb. Today I am absolutely delighted, and one which I've been waiting for quite a while, to introduce you to Ade from Bridgewise. How are you doing?
Great, thanks for the time.
Great to have you in, and super excited to have this conversation. You know, I've been watching this sort of, you since you've arrived at the business, the sort of growth and story develop as it is. You're probably in the coolest area of tech at the moment with AI and the story that's being created over there. It's another startup journey, another fascinating sort of growth. It's an Israeli business that's sort of landing over here and expanding throughout all of it. I've seen you at extremely busy at events all over the globe and doing some cool stuff at the moment, but lots to get into today. So Ade, let's kick off. Tell us a little bit about yourself, tell us about the business, and then we can crack on from there.
Yeah, definitely. Thanks for the opportunity. It's great to be here. So in terms of myself, my background is really capital markets. I started off as a sales trader at Bloomberg, so I was at the agency brokerage business there, Bloomberg Trade Book, and then moved to Barclays. So I was on the prime services desk for a couple of years, and then on the equity business post the Lehman acquisition for about another 4 or 5, and since then been in various kind of tech startups and scale-up firms. Joined Bridgewise a year ago to help build the business in Europe and in Africa.
Amazing. And it's tell me a little bit about that sort of decision, because I know from experience that you had a few options. You're a man in demand at various different stages of your career. Bridgewise was something there which you couldn't say no to. It sounded like a fantastic opportunity. Tell us a little bit about what drew you to the business.
Yeah, I think it's the stage of the business to start with, so that established product market fit, and it was really about scaling up the business. It's in financial services. I'm a capital markets guy. I love the market, although I can't write any code. Love technology, so that kind of interface between financial service and technology, love that. But the big driver for me was the stage of the business, the opportunity to really grow and scale a business.
Yeah, and that's you, feet on the ground here, first person in Europe and scaling out Europe and Africa.
Yep, that's right. So I'm responsible for the business in this region, and we're scaling it up in terms of brand recognition, so doing things like this, going to events, increasing the number of clients that we have, and also building the team.
Fantastic. And tell me a little bit about the business itself. So, from everything I've looked at, read and heard from you, it's pretty cool. Tell us a little bit about whet the appetite.
Yeah, absolutely. As you said, it's Israeli founded. It's a pretty interesting story. So basically we have 4 co-founders, and they built a model to help run a long-short equity fund that they had. So they built this model that was generated, had machine learning and AI capabilities, and they were running the fund. They were running about 50 to 100, or just under 100 million at its peak, doing reasonably well, looking to scale the business, trying to get more funding in. And then COVID hit, and they met an investor that said to them, we think there's more value in this as a technology rather than you running a fund, and they pivoted to the technology side. So do you
remember when pivot used to be a dirty word?
Yeah.
In tech, wasn't it? Now it seems I think COVID sort of changed that round, didn't it, to be something there where you could actually sort of see it and fast track and progress everything within it. So, so it was an investor who they met that said, the value's here.
Yep, we think the value's here. They looked into it, analysed it, decided that was the way to go.
That's amazing, isn't it? I love that. And that's the power of a good investor as well. And so the investor then got behind them at that sort of stage?
So we have seed investors that they had at that stage, but we just closed it around at the moment and got more institutional investors in place. So we've had great support from our initial investors and subsequent investors, yes.
Amazing. We'll come on to that sort of piece in a minute, because I love those good news stories about companies getting funding at the moment, because I know it's not been easy, but there's obviously where that money's going. I always think that's a great sign, because it's, if you're getting it right now, that's a good echo to what the business is doing. Okay, so they're there and they see this opportunity in the marketplace. They recognise that actually this pivot's going to be something that's good. Tell me what happened then.
So they pivoted to being a technology firm, repurposed the technology to be able to deliver it to end clients, and then started selling it locally in Israel. And about a year ago, just over a year ago, we started building our business internationally, actually taking out to international clients.
And what's the appetite been? Because I know that sometimes when as you know, in various businesses, we've worked quite strongly with Israeli-backed firms. that sort of first phase of it goes one of two ways about adoption externally, and it's about getting the right people on board. So with you there and having that sort of background, I imagine it's the sort of perfect mix, because it's a difficult first hire for them to make.
Yeah.
What's been the adoption of it outside of Israel?
Yeah, so in Israel we've had great take-up right across the ecosystem, both on the sell side and buy side, retail, institution. So for me that was interesting because it showed that there was a product market fit, that there was actually a live product that delivered for all these different clients. And taking it out outside of Israel, it's really, that's why we do things like this, frankly. It's really to increase the awareness of what we do. Yeah. So a lot of people don't yet know what we do. It's about increasing brand awareness. So the take-up we've had has been really strong. So within the retail focus space, we can get into that a bit later when we talk about use cases. We've had really great take-up because the return on investment is so clear for them. Yeah. And on the institutional space, the sales cycles are a lot longer. Yeah. So Europe has been great for us. In the exchange space, Africa has been great for us. Yeah. We're growing in the US and about to, we've actually signed our first client in Asia recently. So it's a global story now.
So that exchange world in Africa seems to be the buzz which I'm hearing more and more about at the moment. And I don't think it was that as prevalent in capital markets as it had been certainly over the last 10 years, but I feel like over the last 3-4 we've been seeing an awful lot of business come out of the African exchanges. What do you think's behind that? What's driving that?
So there are a lot of, I think there are lots of different angles. So you take a country like Nigeria, there are about 250 million people, average age is 19. So there are lots of people who are young, need to invest in order to kind of grow wealth and create wealth. I was actually at the Association of African Exchanges at the end of last year, and I was surprised by some of the themes that came out. So people, the kind of investing in equities is competing against you would think crypto, of course, but lots of people are involved in crypto, but against gaming. So this kind of younger generation, the way they look at investment is very different. So for us, the exchanges are interested in our offering because it's about increasing content to show the investment community how stocks perform, why they perform in this way, educating that market and thus driving engagement on the back of it.
You mentioned beforehand about getting the story out there, which obviously I'm keen to help with, but also about the sort of clear ROI of it for customers. So when you're there, and I can tell when people are excited about the products which they're doing and believe in the products which you're doing. As you said, look, you've got clear use cases from what's happened out in Israel, and a product there where you know it's going to make a difference. And for you, as I say, to go into a business there, to be the first on the ground and to back it, that's a big investment from you as well at that same stage. To me, it means I rate the product. I think the product's got a real scalability to it. I know my customers I've spoken to for the last 15 odd years are going to want to buy and be interested in hearing a little bit more. What is it that you think makes it a no-brainer for people who you're talking to get involved in the product?
Yeah, absolutely. So I think if we take a step back, trying to understand what the problem is. So if you look at all the exchanges in the world, there are probably about 200 exchanges in the world. Yeah. But the top three, the two big US ones, NASDAQ, NYSE and Shanghai, they represent 50% of the market capitalization of all the exchanges.
Is that right?
There's massive concentration of capital, but that's only getting worse. Like if you look at the US, so last year, and their two big indices had a great run up, up 20%, 25%. That's pretty good relative to all the other exchanges. But most of that, about 60% of it, was driven by the big 7 technology stocks. So again, massive concentration of capital. So there's this issue, even in the most deep and liquid capital markets, the US, where it's kind of a few companies that's driving all the growth. Now, if you look at it from a research point of view, there are about 45,000 publicly listed companies, but only 20% of those have any analyst coverage. That sounds ridiculous. The models is broken. So you can understand why that's the case. It's a classic thing in most businesses where 80% of your revenue comes from 20% of your clients. Yeah. So you'd have a situation that a great blue chip, say Microsoft's probably got 70 analysts covering it all over the globe. But you could have a kind of semiconductor company in Cambridge that has a market cap of 50 million pounds and hires maybe 2,000 people and has no analyst coverage. So there is this issue where it's only the largest companies globally that analysts are covering. So what we're able to do with our technology is it's kind of machine learning and AI, because we have, for a company that's been in existence for at least 20 years, we have 20 years of data that the machine learns on that. And then when the the reports come in, it then runs through the analytics and generates a report and the recommendation on the back of that. So what we're able to do is for any public company that's at least 10 million market cap and has at least 2 quarters of filing, so pretty much any ongoing public company anywhere in the globe, we can give you an institutional grade report and a recommendation on the back of that. So it's about driving that access and liquidity and engagement to the long tail of stocks that aren't covered at the moment. That's what we're doing. And so it's of interest to me because it's something that, again, you talk about pivot, like disrupting. It's disrupting the current model. We have something that's actually adding value to the market. And the reason exchanges love it, not just emerging market exchanges, but major exchanges in Europe. So we're speaking to, I'm not sure if I can mention them here, but I'll mention them anyway. LSE, the LSE 6 in Switzerland, and a number of NASDAQ, JPX, so major global exchanges, is they're trying to show the investment community insights into their stocks. So the LSE want to be able to say, these AIM-listed stocks, other banks may not cover them, but we can provide you with research content to give you an idea of what these companies do, and then you can decide whether you want to invest in it or not.
And what's the take-up been like? Because as you say, look, when you frame it there, it becomes a really exciting sort of process, isn't it? And I always think when I'm listening to these sort of conversations and having these sort of conversations, I'm thinking, right, why do people invest in that? And it's usually, as I always say, it's down to cost reduction, friction reduction, speed, efficiency, productivity gain, or all of the above. Where do you feel like the real take-up is? Yeah,
that's a really great point. So I think I went to an AI conference about a month ago in Soppel House in St Albans, and it's a 2-day thing. The first day had all these super smart people. I'm probably the only person in the room that didn't have a PhD, and I think I understood about 10% of what was happening. And then
in many of those rooms.
The next day was more kind of about use cases and how people are using it. And what struck me was that most of the use cases of AI in the financial service, I know we'll get into it a bit deeper a bit later, is about efficiency gains and cost reductions. So that's where the market seems to be. What we're able to with our generative AI solutions actually to give you something added value. So we're giving you a research report which you previously wouldn't have. We give you a recommendation that's objective which you previously wouldn't have. So we're in kind of the more added value revenue generating space.
Because that to me is incredibly important. Because I think there is so. I've got this whole theory at the moment that business as a whole is becoming more and more difficult to get the same sort of productivity or the same profit margins out because of increasing costs and increasing expectations and like everything around it. There is an ever-growing pressure on businesses to find efficiencies from it. So everyone shoots around left, right and centre trying to reduce. And actually I think where the margin can only move up is where you increase alongside it. So you have to be super efficient, that's a given. And where technology can drive that sort of stuff, absolutely that's where the investment has to be really clear and really well placed. But the thing that really excites me is where you can do things that move people further forward and increase that productivity, and the value added that you're doing there not only sort of removes some of that friction, increases the thing, but it makes people better. And I think if you can have that sort of superpower of a product that makes people better and increases productivity, when I bang on all the time about how we're in a productivity crisis as a globe at the moment, but particularly here in the UK as well. That's got to be a focus, in my opinion, about how we can drive that sort of play.
No, I think that's a really great point. I think if we look at the use cases we solve today, maybe there are 3 main buckets, maybe a 4th, but that's relatively new. But 3 main buckets. So exchanges, we can talk about in a bit, but institutions, so sell side and buy side. If you look at the sell side community, most people we've spoken to about our solution, the initial response is a bit of skepticism or concern. Now you can look at that, you can understand that, because most people are thinking, is AI going to take my job? Like, how's this all going to evolve? The way I like to look at it was in my role at Barclays, I was an electronic sales trader basically, and there was this concern that the electronic desk was always going to take business away from the high touch desk. So there was always this tension. It's like dating myself now, but about 10 years ago. And what you've seen with the evolution of the market is that the lower margin stuff, the kind of lower volume, high frequency stuff is still being done electronically, but the large ticket is still being done on the phone. So the skills of the sales trader are still on there, because you've got to work the order over a number of days. You've got to understand how that stock trades in order to do it. So we see the same in the sell side community. We're actually approached by one of the leading, if I describe them too much, they're not yet clients, so you'd know, but one of the leading UK specific banks. And the guy who runs that business was interested in talking to us, because what they're looking at is and which is very forward thinking, is that why do I need all these guys who half of them probably went to Oxford or Cambridge, super smart guys, being paid six figures, like slaving over a spreadsheet to create the reports on a company? Surely the value that person adds is in their understanding of the sector, the conversations they can have with their corporate clients to give them that insight, and introducing them to the corporates and facilitating that. So we see it from that sell side perspective. It's a complementary service.
Human augmentation.
Exactly. So we create the basic reports. You can edit it, add to it as you want. We have our own recommendation, and obviously if a company is editing it, there's a disclaimer on there. So it's about solving that aspect of it, where the human can then do the real additive stuff. So the way we see it from an efficiency point of view, it's about helping the human do their job better.
I think this is an interesting sort of point. I mean, we'll move on to that sort of use case bit, because I'm at a conference tomorrow, as we were saying beforehand, AI in capital markets. I think it is without question the sort of buzzword of the last 12, 18 months or so. It's on everyone's lips. You speak to institutions around it, and the reticence will be two or threefold. One of them is obviously, will it take our jobs, etc. The classic sort of human reaction to anything new in technology and all those sort of things, until people recognise it. The second thing is about the accuracy, and to me, AI's next frontier, in a similar sort of thing to what we were talking about beforehand. I speak all the time about digital assets, and its job is to win trust before it can move on to become a genuine asset class, in my opinion. And it's moving towards that sort of thing as TradFi gets involved. But in this AI journey that we're on right now, trust remains equally applicable. So people are skeptical about it, because it's like, right, the natural nature of, are these machines taking our jobs, and should we be scared of them? And then it's like, right, when you get over that, and you're saying, right, okay, this can make us more productive and efficient, which is something which we need to do to keep our business moving further forward. The problem comes when I look at AI, it hasn't got the human element to it when people get it wrong, and so they trust on that side of things, and they talk about approximately right. So it's great if you want approximate, and in finance we know that approximately right doesn't necessarily work with the numbers you're dealing with. So that to me always feels like everyone wants to be involved in AI, but until you can get it really deeply entrenched and embedded and working, that's always the reticence around it. I think we're starting to get to this inflection point at the moment where people are starting to say we've got genuine use cases where this is working, and solving those skeptical elements of what we're talking about beforehand. Yeah,
no, I think that's a great point, and it's a valid concern. I mean, I'm a commercial guy, but I've always been around technology. I'm not a technologist, never written a line of code, couldn't read a line of code, and we've got our CEO is one of these super bright guys, this quasi genius guy. He's got a big thing about responsible AI, and the way we look at it is that, as we said earlier, we don't think at the moment the market is in a place where AI is kind of efficiency, reducing costs. We're not on that space. We're about revenue generation, adding value. But when you're in that space, you've got to be able to explain to people how you're doing it. So what we do is that we take the raw data from one of the global market data providers, we run it through our models, we generate a report on the back of that. So you know where the data's coming from, we have a methodology in terms of how the model works, and we have reports on the back of that. But from the responsible aspect, it's really powerful, because we have our equivalent of ChatGPT. It's called Bridget. It'll have female notes apparently. I'm not sure why that is, but so you can actually ask it a question to say, I want to identify the 5 best performing technology companies in Cambridge that have a market cap between 100 million and 200 million and have grown by 15% in the last 5 years. So you can ask it 3 or 4 questions and it will give you that result. And the reason we're able to do that is because it's a proprietary language model. What you have with something like ChatGPT, which is transformational, even like things like LinkedIn now, they give you like a suggested comment before you start. So it's brilliant from a scale perspective. So ChatGPT, you can ask it massive things and it will be able to give you reasonably correct answers. But where it fails is where it's in a specific sector or silo. Say financial services, for example. If you were to ask it, I'm looking for a portfolio of Slovenian companies, it wouldn't quite understand that, because there's this concept they have called hallucination, where it understands something up to a point and then it gets to a point where it doesn't understand, and then it looks at the most likely outcome. So for example, portfolio, I think most people that look for portfolios are looking for a portfolio of artist content. So it wouldn't quite understand that's a financial services because it's a large language model. What we have, because it's our own proprietary solutions focused on financial services, is that we'll understand that portfolio is related to a portfolio of whatever it is, stocks, bonds, some kind of financial instruments. So that whole traceability, understanding what the technology is doing, is very powerful. I mean, we're very big on, I've obviously worked for a number of kind of fintech firms, we're very big on not so much POCs, but actually giving people access to the technology so they're able to try it out for themselves. It's really easy to do that. And that's great in terms of building that trust so people can see, okay, this is what the model's doing, and have questions on the back of that, and then compare the reports to the ones they provide. One final point I'd like to make on that side is if you think about, you know, what is the report generated, it's quite interesting that if globally we saw a report from a major US bank, won't mention which one, and they did a research report on all the companies throughout the world that had a recommendation on the back of it. And the figure they came out at was over 73% of companies in the world had a buy recommendation on them, which makes no sense, right? So the market's not going up that high all the time based on these 73 reports. So the current model of the way that company reports and recommendations are presented is quite broken. And one of the reasons for that is because it's quite conflicted. You know, it's very difficult for an analyst to put a sell recommendation on the largest company in the world when that bank wants to maybe do some business on the primary side with it. So what's interesting, if you look at somebody like ourselves, but something that's machine generated, it's objective. So sometimes people look at it and they think, oh, what am I seeing with my report? But you can look at it at another angle to say, well, this is objective. I can use it to compare against what I'm receiving from another source that I'm not sure how objective it is. So there are lots of different angles to take it out, but we see increased comfort around the use of AI because people are seeing the reports. It's almost like the reality is convincing you of the benefits of it.
It's incredible to look at the potential of all of that as well, because we're still just at the very start of the journey on all of this, isn't it? And to hear you talk about that and to sort of, I guess, myth bust about how it can come into that. And look, to me, this whole thing dials back to the whole concept that this isn't just about trusting the tech and the tech taking away from the human. It is everything to do with that human augmentation part of it, and getting that sort of stuff right in this sort of area, I think just has exponentially more opportunity than anything else with it. It's you know, so much tech is about, you know, efficiency gains, etc., and just trying to smooth things out and reduce. This sort of stuff really excites me because it's just about how can we make everyone play to their potential. And when you start to think about that in the terms of, you know, individual productivity, when you think about, right, what could a situation be to make everyone play at their absolute best? If you're thinking of it in the financial services arena, saying what sort of information, if you can have a dream setup and come in there and just do what you're supposed to do to the very best of your ability, and just, you know, not have all the noise and the admin and all the other bits and pieces, to have reports that make your decision making better, to supercharge and turbocharge you, that gets incredibly exciting about what people can do with things, doesn't it?
Yeah, it's amazing. I mean, a couple of days ago I was at an event actually, and the chief economist was talking about lots of macroeconomic things, and he was saying that, you know, we've if we look at productivity, like, people are always scared of technology, the point you made, and then they live it and they see the benefits of it. And he made a really interesting point. he was saying that basically 100 years ago, like the amount of time we spent washing the dishes, washing our clothes has significantly reduced, obviously because we have dishwashers now, we have washing machines, so you're spending less time doing that, so you have more time to do other things. So I think that's going to be the reality of what we see in terms of our reports, because we service both institutional and retail, and as we were saying earlier, the return on investment is so much clearer in the retail community, and we have millions of people who have access to our reports every day, and so the institutional take-up, the sales cycle there is longer, but we're expecting in the coming months that the adoption in that space will increase because they'll see the benefits of the complementary nature of the service.
So let's talk about that institutional side, because it's forever the bane of the startup, right? You're sat there and you're trying to break into I guess a space where you can make really major difference to. And I think what happens with so many failures in the space is that people haven't built in either A, the amount of sponsors they need in the business to get that right, B, the amount of time that's going to take, or C, make it easy for people to onboard them with the paperwork, you have everything in place, the right legals in place, and the right story in place to get to that sort of phase. With the funding that you've gained, and obviously I imagine the team that's behind it, the pressure is less to nail the institutional part of it and have this Hail Mary where we say, right, we can be the one company that defeats the odds and moves a 8-month process or a year-long process into 6 months or whatever it might be. How have you found that sort of thing, and how confident are you about moving into the institutional space? Because it's not an easy nut to crack, is it? Yeah,
so I think valid point. I think if we talk about the client bases that we serve, so we've got the exchanges at the moment, which we have great take-up on. We've got nearly 10, I think, globally that work with us, a really strong pipeline in that. The use cases is really clear in terms of client engagement, working with their issuers. We have our fastest growing segments, actually retail-focused clients, so wealth managers and the retail platforms and retail brokers. We see great take-up there right across the globe. In terms of the traditional institutions, both on the sell side and buy side, that is a longer sales cycle because it's a more transformational sell. You're actually talking about people changing the way they currently work in order to work with us. So where we've seen greatest take-up in that space is with the market-making community and those kind of quant-driven funds. We have a lot of engagement and interest and hopefully new clients sign on board with those people. So with the institutional space, it's not the traditional challenges that a tech company faces in the it's their procurement units that's blocking you. It's more that we are conservative nature of what they do and getting used to that sort of place. So it's somebody who's taking this on board within a sell side firm. It's something that's transformational to the way they currently work. So it's working on that and explaining to them how that works and convincing the technology and the research team. So it's been interesting, but we'll get there. So I have a theory about this, and it's I think one of the stiflers to innovation in institutions, and particularly sell-side institutions, is there is so much pressure on the individual. And there's so much pressure on the individual not to make a bad investment, not to make a mistake. So it ends up with people playing safe, and playing safe to me is the mistake in that sort of area. And where I think you get gains is where people are looking at these sort of things and embracing them. And so I guess it's about finding those sort of pioneers, and it's the same sort of thing on any adoption curve, isn't it? You have your early adopters, and then your laggards behind it. And for you, I guess it's about going out there and really sort of, getting those influential early adopters to go in there and change it. And it's the same with all tech, isn't it? Yeah, I think that's, again, a very, very valid point. Like this major UK broker that I'm speaking about, it's actually the deputy CEO of the entire organisation that reached out to us. And I think he had about 8 or 10 people on the team, everyone from his technology team, because he was looking at it thinking, I've got 50 analysts covering all this stocks, and we're only covering whatever it is, 200 stocks. And he came across us and was like, "Is there a different way of doing this?" And so he just came with a blank sheet. So you're absolutely correct. It needs that kind of visionary figure on the sales side, and we've got a great growing business even without having massive penetration within that space. And I think that will come in the next year or so. It's really exciting. So let's talk about that. Let's talk about the future and talk about where it goes. So, as I said at the offset,
businesses who I get excited about are the ones who've raised in the climate of the last 12 to 18 months. Beforehand, money was being thrown around like confetti. 21, 22 sort of created some monsters at that sort of stage, with some massive valuations and some big money being thrown at businesses there that was, pretty Hail Mary orientated in some of what they're looking at. The field's been narrowed a lot over the last 12 to 18 months, and I know that money is being invested into businesses there that whilst nothing's a slam dunk, everyone who's having had to raise money over that sort of period has to go through a hell of a lot more hoops to get to that sort of phase. So to get that sort of investment at Series A, I think is an incredible testament to the team, to the product, to you, to everyone who's involved in the business. So well done first and foremost with that. Second phase of it is, what does it mean and where's it go? So so paint the picture. What does it look like now for the business, for Bridgewise, and where you guys head over the course of the next few months and years?
Yeah, absolutely. So over the 2 months ago, we announced that we completed our Series A. So raised 21 million US in that time. So very excited about that. What's interesting with the funding is just the type of investors we have. So we have a traditional VC. We have SIX, that's public, a major stock exchange, the third largest in Europe, and a major bank globally that's not public. And what's also interesting about that is the regional coverage. So we've got one that's North America based, one in Europe, one that's Middle East, and one that has an Asia presence as well. So we've got a really interesting investor base. What we're looking to do is really to scale the business. So at the moment we've established product market fit locally and within the exchange segment and the retail platform. It's about growing the business across those, and also the point we made about the institutional growth. So we've got very ambitious plans over the next year and 18 months, and we're building the team to support that growth. Got a really strong pipeline. We had doubled our revenues last year, tripled our revenues last year, expecting on track to double them this year.
Amazing.
So it's about growing the business.
Right?
Yeah, I mean, the reason I joined, as I said earlier, is because we have product market fit. So many technology businesses can raise a lot of money but not have established product market fit. That may sound like a ridiculous thing to say.
Exactly what you mean. Yeah.
So our challenge now is about really replicating that success in different regions and with slightly different client bases, and growing the business on the back of that. And that's not easy. It's growing a business is a challenge in terms of getting the right people, culture, all that kind of thing. But it's a super exciting area, and also working in artificial intelligence. Lots of people talking about it at the forefront of all these things. Yeah, so very, very exciting. And
also from you, I mean, you mentioned there about the challenge of getting that right, and I intimated it beforehand that there's some unbelievable talent technology-wise in Israel. And one of the things they struggle with, and they have a very strong network within Tel Aviv in particular, and all through the country. One of the issues has been then getting it right as they move out and scaling, internationally, and getting that sort of story right with it. But I think that comes to they've done brilliantly to get you on board to kick that off, the perfect sort of person to deal with that side of things. How's that worked? And obviously you're happy. I can tell that from the conversations we've had and everything like that as well. But what have they done to make that seamless for you? Because it's not only just getting the right person; it's about making that interaction there. As you said before, look, you're remote, you're working there, you're not in an office, etc. at the moment. That will change over time. But it's a big leap from both sides of it to get that right. What do you think some of the takeaways from what you've done, what they've done to make that work as well as it has been?
I'll get you the check in a moment for all those nice things. So I think the first thing to say is that most Israeli companies, when they go international, they traditionally go to the US.
Yeah.
So there's obviously a network there, and that's the plan that that's the standard route for Israeli tech companies. We've taken a slightly different approach because we think the opportunity is so big, and capital markets is not a US focused game. So, and in some ways, actually, it's more challenging in the US because one of the differentiators we have is our language capability. Like 78% of our users engage in the report outside of English. So that whole thing about driving access. So we've taken the approach of going global. I think where it's worked for them. I mean, the great thing with our founding team is that super smart guys, super driven, but they understand that there are areas in which their skill set have limits. You know, they're not capital markets people, haven't engaged in the markets as deeply as some of the other people in the organisation. So it's about that classic thing of understanding where your strengths are and where you're not so strong, and trying to hire somebody who has strengths within that area.
Yeah.
I think from my perspective, I'm at a stage of my career, we were talking earlier, where I love working for scale-ups. Like, I enjoy what I do most of the time. You know, I've worked for two great big institutions, learned a lot, but your roles are quite narrow.
Yeah.
You know, what you're doing every day is pretty similar.
Yeah.
And so this is great in that you get to do lots of different things, you get to engage with lots of different clients, technology, sales, internally, externally. So I enjoy what I do, and at the moment I've got a family and three young kids, so don't need to be in an office socialising. Sometimes good
you
just
do.
to be. Yeah, exactly.
Take your pick.
So it's great to have that. Lots of travel involved. So it's really, what's of interest to me is at this stage, it's about working for a business that's ambitious, looking to grow, and where you can really make an impact in the business.
Yeah.
And when you work for smaller companies, your impact is much more obvious. You know, you can work for a great organisation and you may be doing a great job, but there's so many hundreds of people. How do you differentiate yourself? And in a small business, it's very clear the impact you're able to have. So so far so good.
Fantastic. Well, look, I wish you massive luck with it.
Yeah.
It sounds like everything's in place there, and I love the things where it does, as you pitch it, you can tell that there's real benefit to come from it, and that to me is a great sign. So I'm looking forward to seeing the rise of it and continue success. For people who are out there watching this at the moment, who want to find out a little bit more, get in touch with you, find out more about the products and the business, etc. What's the best way to get in touch?
So get on the website, LinkedIn, all these digital platforms. Yeah,
we're all over it.
Open to
Listen, my friend, it's been great to see you. Thanks for coming in.
Thank you.
And thanks to all of you for watching. We will see you soon on the next episode of Fintech Focus TV. Thanks a lot.